All 5 of the major markets saw gains last week after reversing from the prior week's losses. This marks the 5th week of the back and forth pattern, alternating between gains following losses. And once again, the major markets were flush with new all-time highs in a number of the indices. The gains were fairly consistent across the style boxes. Unlike recent weeks, which saw significant over or underperformance in one style box relative to the others, the gains were relatively tightly paced with each other, hovering around a percentage point gain each. The only segment that was notably short of that was the Mid-Cap 400 Growth Index, which experienced a virtually flat weekly performance. At the sector level, there was a little bit more clarity between the winners and losers. Financials dominated the gains with a 3.56% weekly return. Utilities trailed in second with a gain of 2.28%. The remaining 8 positive performers added less than a percentage point, which dragged down the overall average of the S&P 500. Consumer staples was the lone sector in negative territory, with a loss of just over half a percentage point. The positive returns came on the back of some noteworthy economic data. The ISM Services Index reflected a record-setting reading of 64.1%, surpassing the estimates of 60.5%. Meanwhile, initial jobless claims came in at expectations with a rating of 385,000, dropping slightly from the prior reading of 399,000. Continuing claims also fell, with 2.93 million regular claims, compared to the prior reading of 3.3 million. This marks the first reading below 3 million since the pandemic began. On Thursday, the July non-farm payroll numbers beat expectations, with the addition of 943,000 new jobs for the month. This surpassed estimates by nearly 100,000. Moreover, the report also included revisions for the months of May and June, with a combined total of 119,000 additional jobs. The Treasury market took this news all in stride as well, as the 10-year fell 7 basis points to a midweek low of 1.17%, before climbing back above the prior week's close, adding just as many basis points to end the week at 1.31% yield. This accounted for some of the financial sector's outperformance, and the weekly loss in the Bloomberg Barclays U.S. Aggregate Index, which fell 0.25%.